We need to talk about the one thing that you need to do. The one thing that you need to do during an investor recession if you're raising funding for your startup. And I'm talking about any round of funding, early stage to later stages. And I don't make this video lightly. I make it about the current events that are happening right now as I'm recording this in April 2025, but also any time that you're facing a type of investor recession. We're going to describe what that is. I'm talking about what you need to do for this next little while, and I'm predicting the next year until 2026 if you're watching this video right now. I know that I made a video at the beginning of 2025 thinking that the outlook was going to be better. I thought with the new presidential election coming through, there's going to be optimism in the market. Everyone was going to get back to business. Boy, was I wrong. And I'm okay with admitting when I'm wrong. And therefore, I'm doing a follow-up video to educate all of you on what you need to be doing and what I'm advising all the founders at startups.com and what I've been doing with my own portfolio of startup ventures. If you don't know what an investor recession is, it's when capital starts to leave from the markets because there's fear. We just had what could be considered a black swan event. We know it was coming. It wasn't an emergency, where Donald Trump, the president of the United States, decided to make the rest of the world mad. And whether you agree with him or not does not matter your political affiliation. The reality is that the markets are reflecting the sentiment that everybody has towards the economy. And that means money is leaving the market and people are going to get really stingy because they're scared. And that means it's not going into assets such as startups, which is one of the most riskiest alternative investments that you can make. In fact, a lot of smart investors are going to take their money and they're going to go back into the stock market now because they've been amassing cash and they're ready for dips like this because everything's at a discount, and you're going to see people start to buy and the market's going to get some support depending on how far we fall. While that's great if you're investing in the stock market, but if you're trying to raise funds for your startup, especially if you're early stage, but also affecting later stage investments, let's say you're trying to raise for Series A or B, this is affecting you. This is an investor recession. Furthermore, the companies that could be going public now, which basically gives us optimism in the market, that creates that greed, that frothy cycle where it's like, wow, these startups have gone out and made the money, giving the investors a return so they can put the money back into the market or invest it in these other high growth, high opportunity startups. That's not going to happen. Take, for example, a darling of a company, OpenAI. OpenAI could easily go public right now, depending on what their goals were, but they're not going to because they're frozen. They're going to watch the market. They don't know how these economic conditions are going to affect their financial health overall. Therefore, they're going to take a seat and wait because they're already generating money. They already have lots of money in their war chest, and that means everything gets frozen. And if they're frozen on that side, the general retail investor is going to be thinking different things, especially those LPs that need to invest in those funds. So those GPs have money to invest in your startup. And that includes angels, family offices, you name it. Everybody is going to be frozen. They're going to freeze. And that is the sign of investor recession. We've already seen signs of it. We've seen investments go lower and lower and lower. I thought they were going to pick up. But what do you do in 2025 or any type of cycle if you're watching this at a later date? There's one thing that you must do, which is going to help you more than anything else. I'm going to give it to you right now, and that is cash flow is traction. And this may seem counterintuitive to everything else I've been teaching because aren't you saying to me, Ed, traction is traction. Users, signups, revenue, that is traction. Traction is traction. Well, it's changing right now because when you're in that investor recession, it's all about cash flow. Let me tell you a story about a startup that I launched right before COVID. We worked for months to get this launch ready. We had this whole public rollout plan to go. We had booked our venues. Then suddenly there were all these shelter in place, like do not go out, do not be in public, and all public venues start to shut down. And I literally was standing in the venue for our launch party, our big demo for our initial customers. And I started getting notifications saying, did you see that the local health organizations are saying everything shut down, do not go out, do not go into public venues? And we're sitting there going, well, I guess nobody's going to show up. And of course, we started to fundraise, but people were telling us this is the absolute worst time to fundraise. This was a black swan event, and the market started to tank. And I understand COVID was a very interesting time where all the stimulus and interest rates going down to try and get the market back up created this really weird, bizarro land, this parallel universe where suddenly we had some crazy times in 2021. But in the beginning, it wasn't like that. Everybody was afraid. And so the market tanked, and everybody said, you are not going to be able to raise money for your startup. It's doom and gloom. So if the investors weren't going to come in with their money, I had one other choice, and that was to crowdfund. And I'm not talking about equity crowdfunding, I'm saying reward crowdfunding. I went out and sold $45,000 of our product on Kickstarter, and then I was able to show investors, see, even during COVID, our product is in demand, even more so. Why? We pivoted and we went fully online, but we went straight to virtual right through Zoom. And by selling $45,000 of revenue, we ended up raising about an additional $200,000. And that was enough for us to weather the entire COVID storm because revenue was coming in, because we managed to pivot, because the opportunity was there. Now, you may not be in the same situation as I am. Every startup is different. How does this apply to you? The principle is this: you want to show investors you can survive and then tell your story. Cash flow is traction. And we always say traction helps investors want to invest in your startup. Therefore, you need to go out and increase your cash flow or maintain your cash flow or save as much cash as possible so you can keep your startup going, maybe on a shoestring budget, just putter it along and survive. Then you're going to tell investors your story. And you might have a story like mine about how you pivoted and you ended up making more money than even expected and anybody said you could. Or you may say to investors, here's what we did. We ended up taking advantage of deals in the market and we used our cash in such an efficient way that we were able to get customers as well as secure talent, and we managed to get this traction despite the cash flow issues, despite what was happening in the recession. This is the reason I say recessionary times are sometimes the best opportunities to build a startup. You're scrappy, you're disciplined, you've got a lot of discounts on the market, there's a lot of talent that's out in the market right now, and that's only going to increase because there's going to be layoffs, you name it, it's out there, and we're dealing with these conditions, but how you deal with them creates that story. How you deal with your cash flow creates that traction story that you're going to tell investors, and they will be impressed with you. There are other ways to maintain cash flow as well. Go out and get a job. You might not want to hear that as a founder, but if you're not going to be raising capital anytime soon, well, show the investor that you're willing to go out and get work. Even if you get work in your industry, that's going to be good as well. And you can say, I went out to get a job to make ends meet, and I learned so much about the problem and the solution and validated my market. I did customer discovery while I was working to get cash flow so I could survive. The more creative, the more relentlessly resourceful you are, the more the investors are going to be impressed because that's the exact type of founder that they want to see. But also don't forget, there always will be capital in the market. And while all these other startups are going to be shutting down, doom and gloom, they're screaming from the rafters, they're desperate, they're complaining, they're blaming the market, they're blaming Donald Trump, they're blaming investors for not keeping their startup alive, you're going to be chugging along and you're going to be surviving and you'll be the last person standing. And I like to repeat this advice that I got specifically for this YouTube channel. They said to me, Ed, if you can just be better than average, consistently longer than the other person, the competition, you will eventually win. And that's the same thing with startups. It might not be with your startup. It could be with another venture. Maybe you had to pivot and you can't build what you're intending to, but you came up with another really great idea that worked during recessionary times. Well, that's going to carry you forward and you will be a successful founder if you stay in the game. Stay in the game, survive, make cash flow king, make sure that it is carried forward and you do everything you can to be able to get that story and to tell the investor, and you should be fine. Stick around with this channel. Best part is, all my stuff is free. I'm here for you. Let me know what you're dealing with, what you are doing to make it through these crazy times right now. I'll share what I'm doing. Let's do it together. Thanks for hanging out with this video. Watch some of the other videos that I put on the screen that are going to help you out. I'll see you in the next one.